You're watching The Open on BNN Bloomberg. Let's get you up to speed on some of the early movers in Toronto trading the first 45 minutes. We've talked about this deal between Royal Gold and Sandstorm Gold. Sandstorm being acquired by Royal in a bid here to boost scale on Royal's part. Sandstorm shares higher by close to 5% on that news today. I also wanted to check in on shares of Dye & Durham. We told you earlier in the program that you have a major shareholder, Plantro, which says it owns about 11% of Dye & Durham's stock, which is calling on 3 members of the board to be replaced, including the chairman, and is urging a sale process to begin for the software firm. So we'll see what happens with that story. We've also heard a lot of people talking about the defense theme, the industrial theme, and that's been generally helping out stocks like Bombardier and MDA Space. Bombardier recently had some good news on a new order. RBC's analyst who covers the company putting out a note suggesting the stock could get to $175 just on some of the favorable discussions around things like defense right now and the aerospace industry in general. And MDA, the analyst at RBC who covers the company, has also said in recent days would not be surprised to see it tick higher from here. It's been a fairly strong performer so far in 2025. So those are a few gainers. I did want to highlight a notable laggard this morning, and that is ATS Corporation, which is under some pressure, down about 7.5% after the engineering firm announced that its CEO is going to become the CEO at another company. He's shifting to the global medtech firm Baxter International. And so analysts are just trying to assess what exactly that will mean, selling the stock and perhaps asking some questions later. I'll tell you, a lot of people have been asking questions about the road ahead for the U.S. dollar, but if you look at trading today with some of the uncertainty in the air, it seems like investors have been gravitating back towards the greenback. This is a look at the Bloomberg U.S. dollar spot index, which tracks the currency versus a basket of others around the world. For more on demand for U.S. dollars, what that means for the loonie and other currency stories, we're joined in studio by Shaun Osborne, Managing Director and Chief FX Strategist at Scotiabank. Shaun, nice to see you.
Pleasure.
Okay, so let's just start with sort of the broader thinking in the currency markets these days. We start a new week. There's lots of trade deals that maybe have to happen. Investors gravitate towards the U.S. dollar. Any sense on why that is?
I think it's a reflection, partly the chart you just showed there. I mean, we're up a little bit over the last few days, but we're down 9% so far this year. So there's been a huge move in the dollar so far this year. It's been one of the worst runs in the dollar we've seen in a number of years. So some consolidation in the dollar, probably not too surprising here. There's nothing really, I think, outstanding in terms of the story for the dollar at the moment. We had some data last week. Non-farm payrolls a little bit stronger than expected. Rates have risen a little bit, and there's probably a bit of a bid for the dollar just around these tariff headlines that you mentioned. So a little bit of uncertainty. But it's, I think, really just a short-term trend, a short-term firming in the US dollar. There's no sign of the underlying trend, very significantly lower that we've seen in that chart just now, reversing at this point.
I mean, whatever that trend ends up looking like from here does matter, because the Canadian dollar has had a strong lift because of the weakness in the US dollar. People have been buying gold, and obviously you watch the relationship between gold and the US dollar. Then you've got a whole chorus of people who are talking about digital currencies to replace fiat currencies if fiscal deficits are getting deeper in the United States. So when you're looking out from here, what's the kind of pro and con story for where the U.S. dollar fits into the conversation?
I think the negatives is pretty clear, the ones you mentioned. Fiscal policy uncertainty, trade policy uncertainty, you can add into that the pressure that this administration is putting on the Federal Reserve and concerns about maybe the erosion of Fed independence, policy independence going forward, and what that might mean. There's been a shift away from the US dollar to some extent. We can see that central banks have certainly not been accumulating US dollars in the way that they have previously, not necessarily shedding those dollars or moving out of the dollars, but they're buying gold, they're buying other currencies. And digital currencies are coming on stream and fairly mainstream now in terms of their place in the financial architecture. So then the negatives. So I guess the positives for pretty significant negatives, but the positives for the dollar still at the moment is this question of what is the alternative? If you're not going to be invested in US dollars or US dollar denominated assets, where do you put your money from a global investor point of view? The US economy is holding up relatively well still. So there's been this, I think, continued expectation really since Liberation Day back in April that tariffs would eventually start to have a significant impact on growth or prices in the US. And we still haven't really seen a significant sign of that. That may still be coming, but right now the US economy is holding up relatively well. So we've had a run of relatively soft data, nothing too significant at this point. In broader terms, growth is holding up really quite well.
Okay, and then what do you think that all means for the loonie? It's been a long time since we've been anywhere near, let's say, 80 cents.
Yep.
Give us your outlook for the Canadian currency by comparison.
So we're probably going to hold around these levels right here, 73, 74 cents, probably as part of that consolidation. I still think there's still pretty good interest from our Canadian-based clients to sell into US dollar rallies, pick up cheap Canadian dollars, in other words. Our forecast for this year, 134, 74 cents roughly.
74 cents.
For 2026, we're looking at maybe a drop down to 128 for the US dollar, so around 78 cents. We're getting pretty close to our year-end 2025 forecast already. So for some of those currency forecasts that we've adjusted recently, we're already seeing the dollar getting close to or surpassing some of those forecasts. So we may have to adjust their dollar sights a little bit lower. For the Canadian dollar, I'm still pretty comfortable with that 74, 75 cent range for this year. We may well, we could possibly get to that 78 cent point a little sooner. A lot depends on what the Bank of Canada does with interest rates, how quickly interest rates fall in the US, what kind of pressure the Fed comes under from this administration to cut interest rates. So a lot of moving parts to this story still.
I also wanted to get your take on the relationship between gold and the loonie. When we think about the US dollar, I was saying it earlier, if there's sort of a rip-roaring rally for the greenback, the general theory would be that would maybe work against the price of gold. Gold obviously has been very strong. In Canada, though, because gold prices have been elevated, we've seen more mining activity. I've even heard people on Bay Street sort of speculating that, well, if there's more demand for Canadian gold because we're mining more because the price is up, that actually gives a helping hand to the value of the Canadian dollar. Maybe you have to buy more gold and buy the Canadian currency as a result of that. Do you give that argument any weight?
Yeah, I think we're still a resource-based economy here in Canada, so commodity price. We've seen that connection between the Canadian dollar and crude oil prices weaken quite significantly over the past few years.
Yeah, that's right. That's right.
Is maybe less of a factor from an FX point of view. Nevertheless, we're still quite strongly connected in broad terms to terms of trade and commodity prices more generally. So the strength we've seen in metals prices has helped the Canadian dollar out to a limited extent, I'd say, over the last little while. But a lot of these kind of traditional relationships in FX, I think a lot of attention is being paid to this at the moment, these traditional relationships between currencies and interest rates, currencies and interest rate differentials, currencies and commodities. A lot of these relationships are breaking down as people take a different view of the dollar's broader outlook because of these things like trade policy, fiscal policy, and Fed policy independence.
Yeah, you're having like a short-term and a long-term conversation simultaneously, which is impacting